Okay, hello traders. I'm sorry about that. Little issue with the broadcasting this morning. Welcome, live intraday strategy webinar. Today is Thursday, November 15th. Good to be with you guys this morning. Can I just get that an okay if we are good on audio and video? Yes. All right. Thanks, Ty. Apologies, guys. I literally just forgot to hit broadcast and started going. So great to be with you guys this morning. We just got the release of U.S. Retail sales, pretty much in line with expectations. Advanced print came in at 0.8%, better than 0.5, the expected. Same thing on the X auto, a little bit weaker. So when you strip out auto and gas on the month-on-month print, but largely in line with expectations. So that's the release we just got, but we do have a lot to cover. Last webinar of the week, I do want to go over the levels for DXY, Euro, Sterling on the back of all this news coming out of the UK. We do have a lot to cover there. Aussie dollar and Aussie yen, both interesting plays. You got some strong data yesterday, literally as I was publishing that thing. The print came out for Aussie employment. So that offered a little pop there. We'll circle back on dollar CAD and Kiwi dollar from earlier in the week, and we will wrap up with gold into the close of the week. We're at pretty major levels there as well. Okay, so we'll start from scratch again. I'm sorry again about the AV issue there, guys. So DXY, here's what it looked like earlier in the week. Okay, so the major level that we were looking for the turn, and obviously this was also apparent on the weekly charts with that former long-term slope from the 2011. We were looking for failure here this week ahead of 97.87. We didn't actually get the extension up into that region, which is kind of what concerns me a little bit on the near term. I think we'll go over Euro in a moment, Eman. I'm not too opposed to that, actually. In the swing trade, we're actually long, but we'll go over that in a moment. So on the near-term charts, here's what DXY looked like in the start of the week, guys. It was pretty sweet. It came off of upper parallel after rebounding from parallel support. There it is. You saw the break of the near-term descending channel here. We were looking for a move into 96.92. A break below this really should have seen a larger drop towards that 96.45. We came into this region, we dangled just below, and then we rebounded. All things held constant, essentially, I'm still looking for a new low. 96.70 is just a soft target, 96.69 there. 96.45 is the real, more critical zone. Former trend line resistance or slope resistance, now support. Current uptrend, right? 50 line. So really nice spot there. Here's what DXY looks like now. Okay, so we got the drop into 96.92. There's that little test below, reversal. Here's the parallel offering resistance. If we get a little bit higher, okay, 97.50s, but the problem becomes if we do mount this, guys, you're essentially going to look for that tag of 96. Of the 618 at 97.87. So tops are never easy to play. They're never going to be just a quick reversal. If this thing starts to move higher, guys, in U.S. trade above this parallel, we have to lot the possibility for a tag of that 97.78 level, 97.87 level, same level that we were talking about earlier, right? Huge pivot in price, 618 of the 2017 decline, parallel resistance, still could make a move. Not my favorite move, right? At least for the sake of the swing trade that we're in as well. But that's the possibility if we start to push higher today. So just keep that in mind, okay? And again, the longer term chart, guys, for DXY, watch this into the close of the week. If we close below 96.98, that would be a conviction exhaustion in my humble opinion. Just on the fact of not only just the yearly range highs that we made back here in August, but because of that slope we've been following from that 2011 play, right? Pivot, support, break, resistance. Haven't seen a weekly close above it yet. Okay, so DXY is pretty much really well-defined levels here. Really well-defined levels. I want to see failure ahead of this level. If we're going to hold lower, look for that move towards 96.45, 96.50. Top side breach, you still look for possible exhaustion again into 97.87. So what does this mean for Euro? Ty says 96.98. 96. What's that 96.98, Ty? 96.92 is the 38.2. That's the level that we were looking at earlier in the week, right here. The weekly close number, yeah. The weekly close it would be 96.98. That's just the former swing highs that we made from back here. We tested it 3 times, 3 separate weeks, Ty, ahead of this week. We tested and failed to close above. 1, 2, 3, right? So if we get a weekly close above this region, you have to allot the possibility that we were seriously breaking out. There's more upside. If we spike this 618 and manage to close the week below 96.98, yeah, in my mind, that would be an exhaustion weekly play, period. Make sense? Not to mention, as it stands right now, guys, we are marking divergence in price. Even if price was to close right here for the week, oscillator making a lower high, both levels below 70, price action making a higher high. So the exhaustion threat is still there. But if we close northbound of 96.98, I'd be concerned. I'd be concerned. Okay, so that's DXY number 1. Number 2, here's Euro. So here's my issue with where we are in the Euro. And I went over this in last night's update. So the levels, if you guys remember, this is the level we talked about. 1345 is needed to alleviate downside pressure. So that's basically our near-term bearish invalidation level. Here it is. It speaks for itself. You know what I mean? I was all about the long as we were breaking through as well. I did shave a little off here. Stop is going to be still at 1260 on the rest of it. So look, if it moves lower, it'll take us out. No big deal. But it's really defined by this region right now. That's the immediate focus for me. Again, the August low day close been a pretty decent pivot in price. It's also counted as basically the weekly opening range highs. A breach here, 1368 is just a near-term target. This is the big level. And this is Jamie's target as well on the swing trades. Look at that former swing low, break, acceleration, instant resistance. That's 1432. The 38.2 retracement of the entire decline is 1449. So this whole region right here is sort of a big pivot zone for Euro. But we need to see that push through 1345. What's concerning? Well, you made a 4-hour and a 2-hour outside reversal here. This is the 2-hour. Here's the 4-hour just to prove my point. A 4-hour outside reversal bar off former, August low day close. Obviously a pivot in price. It's a little concerning. So I think the stop is well warranted. If we get back below 1260, you're probably going to see this thing go for a tag of, you name it, the 618 retracement down to 1186, just like we were talking about the DXY at its 618. So let's see how it plays. So Iman was telling me, it came off 1135 like a cattle prod. Iman was telling me that she's short from 1330. So here's the thing. I actually, because of this reversal, and that's what I was saying to you earlier in the session, I'm actually not opposed to playing that near-term short. Here's what I'd be looking at. So this is like the hourly play here. $618, $1267. Ooh, we just missed that on that last turn. Yeah, I'm looking for some sort of slope to work with here for you, but it's tough. I'd be very cautious on the short side here. No, it's not gonna do anything. Yeah, I'd be really cautious on the short side. Listen, if it starts to drift and hold below this 1311 level, I'm okay with that. You're still gonna have to have your stop. Basically, I would still say above those highs. So the weekly open is right here. You see this? Let me put the line. Here's your weekly open. Highs, pivot, break, resistance. So forget the November. Well, that's also November open. What's that low level? So these are just former swing lows. I'd be remiss to kind of remove that level. I'm going to leave it there, but I'd probably put the range right here. That's kind of the focus range I'd be looking at right now. So, E-man, that's like 13.11, 13.12 into 13.19. Weekly open, November open, and a pretty decent pivot here. Okay, this has no merits. We don't know if this is in play or not, but I just wanted to see if we can find a level there. But yeah, that reversal bar concerned me this morning. So it's a for me, this is like Sterling, and Sterling's a mess, but the levels are clean. Look for the immediate focus. Look for a near-term break of this range. If we break lower, we take out 1260, we get out of that long trade. I would expect 1239 and a dip back into 1160, 1186. This is a larger measured move, the consolidation break from a couple of months ago. It's a 618 retracement. And that would be a decent area, again, for Euro to find a little bit more of a stronger footing for a bounce higher if we fail here. Okay, here's the daily chart for Euro. And the weekly chart too. What am I doing? Here's the weekly chart for Euro, right? There's that 618 of the entire advance from 2017 lows. We haven't seen a close below this level yet, 1300. This is the 200 week, moving average. Big level. Haven't closed below yet. We're there right now. So you see what I'm saying? It's a real pivotal region, guys. In the market, this environment, while the volatility we welcome, we love it, it's not that easy. Not in FX at least. These last couple of weeks have been, you've seen the jump start of a couple of different moves that have continued to fail, but we still have to stick to our guns on this. But long-term bias remains bullish, says Marco. So Marco, looking at this chart on the weekly, this is sort of a big test of uptrend support. This is a trend, or this is a break of longer term slope resistance. Check that support, and then here we are again. So yeah, the longer term, again, this is just my humble opinion. We're still looking within the broader structure of the ascent, but if you break down from here, you're risking a much deeper cut. And even on the longer term front, if we do get that, Marco, it's still within the confines of the broader uptrend. But it's all about what your time horizon is. So that's the weekly chart. Daily chart looks like this. We made the break below the monthly open. You're trying to test that August low day close as resistance. If this breaks, gives a little bit more hope that we registered a more important low. If this fails, I'd still be looking for that drop here and possible exhaustion again at 1186. There was a lot to look at here. You got the trigger break, and then we tested that trigger as support, former resistance. That's like exactly what you want to see on these divergent turns. So, it's basically it's going to get a jump start for here or not. Near-term picture, again, this is the immense trade, and the short idea on the near term is the fact that you made this outside reversal bar off of, again, the August low day close. So you could see a deeper cut. We're still trying to base some sort of major low. And to do that, we need to see a close above 1345. I'm going to remove this here just to clean this chart up a little bit. Does that make sense on Euro, guys? Marco says, I agree. Thanks, Marco. Iman says, whenever there is volatility, price starts to dance around the levels which you always highlight for us, then takes the direction. And that's the point, Iman, right? I provide you with all the levels I can. How you look to play them, a lot of you will play it in different ways. I had no problem with actually your entry there. You probably could have got a little bit better entry in the short, Iman, because we tested 1345 a couple times. But I have no problem playing that pullback because it's one of those definitive levels. We talked about 1345 early in the week. If we were wrong on that trade, as soon as you break 1345, you'll know pretty quick if you get a close above. But yeah, short scalps against that region have been good. I want to see the larger rebounds start to carry some mass here. But the way that's stalling at the weekly opening range highs, and then we made that outside reversal. Right now, I have to treat this as a range. Look for a break of 1260, 1345. A little bit less than 100 pips there. Yes, thank you, says Emmanuel. More than welcome. Cheers. So that's Euro, number 3. That's number 3. Number 2, rather. Number 3 is Sterling. So look, obviously this thing invalidated pretty quick. The level I was telling you about yesterday in the report was to look for a break of 30.68, 28.77. This was our bullish inbound to start the week. We kind of drifted below it, but when we rallied, we held this parallel like no one's business. The drawdown held at 618, again, like no one's business. And all the volatility that you saw yesterday, there is a meeting, there isn't a meeting, it got canceled, it got pushed, there's an agreement, there's no agreement, right? It happened like 6 different times. This thing was just very, very volatile. But the levels were clean. Okay, it was 30.68, 28.77, back and forth like 3 times. This changes things. Okay, we broke below 28.77. That was bullish inval. You're looking lower in sterling, or the risk at least is lower. Here's what it looked like last night. Okay, now again, you got a kind of double whammy this morning because retail sales were much weaker than expected. Year on year, we got a 2.7% clip. We're expecting 3.4. So you're seeing the slowdown in sales, and then you have this whole Brexit negotiation, which is you had some PMs or you had some officials resigning this morning, and the whole Brexit comes into question again. Look, I was willing to look at this as long as the levels were holding pretty well, but the fact that we've broken below, you can't do anything with sterling here at this point. You can't do anything with sterling. Here's the weekly chart, and this is what puts me on the sidelines. You're flirting with disaster below 27.15. You look for like 25, 24.69 at that point. So I'm going to side this. I'm not even going to give you updates on it unless we get some definitive price action, a little bit more confirmation. But even the momentum trigger break, which it looked like it was doing this week, completely failed. Now, obviously, we have no way of knowing that until we see the close of this candle, but certainly does not look good. So again, trade at your own risk. If you feel like you want to gamble, you're probably better off playing blackjack at this point because this thing is just a mess. And certainly below 28.77, in my humble opinion, again, the risk still remains lower. The risk still remains lower. It's 100 off the high if it's corrective. Something to look at today. Oh, Iman, that's about euro, right? She says, yes, True was struggling at 13.33.45 with the bars encouraged me. Yeah, for the euro short, yeah, it was a nice move. But don't get too excited with it because ultimately above 13, we do want to see this thing hold. And the swing trades are still long against 1260, so don't get too aggressive on it. All right, so that's sterling. Aussie, here we go. Aussie, as I was literally hitting the publish button as that Aussie employment report was coming out. I didn't think it was going to be quite that big a mover. And actually, if you dig down into the metrics, guys, there is some things to cause some concern. So I'm going to zoom out here for the Aussie really quick and give you a quick reminder of what we were looking at. Whoops. Right here. So we had the release of consumer inflation expectations, 3.6, not really the major release, but the employment numbers, we got 32.8 thousand versus a print of 20,000 that was expected. And unemployment was expected to uptick to 5.1%, but it held 5%. So while the markets rallied on that, on the stronger employment print and the drop and the hold rather in unemployment at 5%, you saw labor force participation contract, okay, from 65.5 to 65, or excuse me, you saw that expand from 65.5 to 65.6. We were expecting it holding. So Aussie ripped higher. Then we broke this and didn't see continuation. Again, the trades that have continued to move in the direction that we want, but just lose steam. Here's the level. And this is why if this was going to break today, I wanted to see acceleration. We failed, essentially still at the opening range highs that we made back on the 7th. So again, you might get a little bit of exhaustion pullback in Aussie dollar. The main focus here, or the premise, is we want to see this break. So the parallel of the trade that we were following, or the trend line that we were following from the February highs, if you extend that, take that parallel, extend it to this year's high, look what happens. Okay? Pay attention. Pay attention here. So these are now a couple things that are lining up and saying, whoa, the dollar might have a little recovery in it because some of these stretches are seeing a little bit of a resistance bounce back. But, all things held constant, you guys know the level that would be the validation that the low is in. And that's still 73.27, 73.36. We talked about that level for months and months and months and months and months. That's sort of my breakout validation. But yeah, I caught that slope this morning and I was like, whoa, let's take a quick sidestep here. Here's what the intraday chart looked like. That's the break that I wanted to see fuel acceleration. And you did, right? But it didn't happen very long. And look what we did right after. Very similar to Euro. Here's the break higher, outside 2-hour reversal bar, right off that slope, slammed lower. If we're gonna break, or if this break is legit, we want these lows right here to hold, like right now. So that's all I'm looking at for Aussie. The signature on the momentum intraday doesn't look all that bad. This looks a little tired for me. You know what I mean? We don't want to see divergence. If we're going to move higher in price, I want this oscillator to start moving up too as well. Work with this kind of play at this point. Okay. And we need to see that fueled break above this key zone, inflection zone that we've been covering. So again, we pop through. We're sitting at that as support. At this point, you can just drop that 100% extension. By the way, I was going to add this yesterday, but I was trying to keep the charts clean. The 1618, look where it comes up. 73.05, 73.06. So on slope, when I looked at it again this morning, I'm going to remove the 100 just for the sake of clarity here. But on the slope, it also converges. Whoops. Converges right here, basically into like the close of U.S. trade today, open of Asia. So objective stuff. Here's your weekly open. You set a low. You test the opening range highs. You go for another test here. Failure at slope. Break above the weekly opening range high. Looks for a Thursday, Friday high. Still think we get that move towards 73. Do you really like the long entry at 72.45? I did when it made it there, Marco. I'm not trying to play with you, but this is what I mean. That the reaction that you just got off it is what you want to see if we're still going to make another high. If it gets down here again after making this low, then you'd start to fail and go back towards slope again. Do you know what I mean? So had you asked me that before we made this drop, yeah, I would have said that even 72.58, which is just the estimated 100-day moving average, guys. It's moving every day, so you'll see that move. But if we move, if we were pulled back from this resistance, if we were going to still make the break, that's where you want to see the hold and then the rebound. If after U.S. trade session we make a new low after we open U.S., at that point you'd look for a larger correction, maybe towards a lower parallel, something like this, right? That would be like 72.30s. And in fact, if we do turn lower, and this, guys, this is just conjecture, just in case that we do, this is what we would look, right? We take that in, the 50 and the 38 and the 618, both levels I'd look at. The 50 is right there at 72.30. The 618, right there at 72.15, all on slope, right? So I'm going to remove this for the sake of clarity again, but that would be the risk if we break this low, Marco. He says, I have 72.29. Right on. Right on. Okay, but 73, 73.27, 73.36, this is the big zone. This is the critical area, the pivot that we need to make it through to validate the reversal. One other thing, and we always have that longer view in play, okay? Here's Aussie dollar rather on the weekly, right? Don't take my word for anything, guys. It's all in the charts. It's all right here. Here's that key zone that we were talking about, 73.27. Last year's May low week close was 73.85. I have this whole zone pivoted here, but the reason I have that is because this upper parallel, again, of the same slope we've been following from the 2017, 2018 highs, right? So look, this advance is either make or break here. Ideally, we see a larger stab. I think you risk a pullback before you break ultimately. But as it stands right now, it's a perfect slope touch. This perfect slope touch. So into 73.30s, I think you start to look for the exhaustion trade. But from here, let's see if we can hold above that 100-day. Questions on Aussie. It's number 4. Number 5, Aussie yen, an interesting trade where you could have diversified a little bit out of the dollar if you were reluctant to take dollar price action. Here's what it looked like yesterday. The only thing I highlighted in the update was, look, this thing just made a ridiculously clean weekly opening range. It looks like it broke to the upside on the back of that data yesterday. But again, nothing has steam in this godforsaken market. Here's the outside reversal candle, same as Euro, same as Aussie, right off the highs. It threatens a larger pullback, and certainly this or invalidates the opening range break for the week to the upside. So it's a little frustrating. Here's what it looked like last night, Aussie yen. Right ahead of the data, I was saying, look, the 618, it's stuck between 618. So these are like usually beautiful plays. 81.80 support, 82.50 resistance, right? 618 at the drop. Whoops. 618 at the drop, and then 618 at the rally. So we were just sitting here, back and forth and back and forth. This break got me excited. I thought we'd have that breakout finally towards the upside. Failed. Outside reversal candle for a move lower. So I'm not giving up that this is necessarily a bearish trade per se, but you risk a drop towards yeah, I'd still have to say you risk a deeper drop now if this fails down to here. Was that a 6786? Nope. Okay. So monthly high day close. We should have had that on there. 82.75. It's the high day close for the month. There's the failure. Again, the concern when you fail at the high day close for the month with an outside reversal candle like this, the threat is for a larger pullback, period. End of conversation. Again, we want to see the upside thrust here in Aussie yen. This is checking, slope resistance, not the cleanest, but certainly the downside caught a couple times on that slope. Just no oomph behind it. So if we fail here, again, look for the move into 81.68. That's the level we'd need to see hold. The median line, support, break, acceleration, resistance, break, acceleration, support. If we break below this, you risk like a bigger washout here. Ideal scenario, this kind of fails into a move to 81.68, and then you're back on your way. Okay, so a little bit different of a picture here on the false break of the weekly opening range to the upside. Watch Aussie yen. Interestingly enough, Aussie yen guys, which is you hear all these guys on, it's just you hear all these guys, whether it's the other analysts on Daily FX or any other websites, guys talking about Aussie yen being the risk on, risk off trade. Yeah, that happens at times, but anyone who's looking at this obviously hasn't been paying attention to what's going on in stocks, right? If Aussie yen is a risk on barometer, well, what the heck is this? We've been selling off for the last how many days in the S&P, right? Aussie yen hasn't been doing that. So, take these guys with a grain of salt with their risk on, risk off. They just love throwing that term around. It's just not there. It's not materializing in price. So there are times where this is a very strong risk barometer, and certainly when you're in real heightened market panics, whether it's larger corrections, whether it's sort of a market sell-off broad-based, then you'd start to see that interest rate divergence start to favor Aussie yen to the downside. But right now, this is kind of bucking the trend. So a little commentary there on that. All right. Any other questions for last night's update? Marco, let's jump at dollar CAD. So you have an interest on this on the long-term chart. I'll go over the weekly first. So here's dollar CAD on the weekly charts. You guys know I was trying to short this thing against 31.55, 31.30 for like months, and it was actually the decent play until last week. Last week broke above 31.55. We closed a material weekly close above, trigger break in momentum. That leaves the risk for a swing higher. Okay, the yearly high comes in right at the 50% retracement, a decline from the 2015, 2016 high. That's 33.75. Is there room for a push higher here? Well, as it stands right now, we're actually going to be marking, nope, there's nothing here yet. So that's the threat on the weekly chart, okay, is that we broke multi-year downtrend resistance. We checked that downtrend resistance as support. If this is a legit breakout, this is the breakout that would fuel the next leg. So 33.75, 50% retracement, yearly swing highs. That's what you got to look at. That would be the breakout, Marco, to put you, on the resumption for the broader uptrend in dollar CAD. Where I stand on this is I'm kind of neutral, because this breakout, if it was legit breakout of the slope of the 618 of the high week close, we again should see acceleration here. Or if not, the pullback should find support here, then rip. This has me thinking, again, these trades are just getting tired on all these time fronts. They move through big levels and fail. Here's dollar CAD on the near term front. This is all I've been paying attention to. So earlier in the week, here's what dollar CAD looked like. I'll show you the daily chart first, right here. 786 retracement, 32.56. Again, there's the high week or high day close for the year. Breach of that trend line. Nice fueled run here. Holding that 32 as support. The immediate range in focus is literally this 50 pip range. We've been in it for now 4 days. Okay, intraday. Here's what I showed you guys early in the week. And it's funny because I was saying this thing loves this trend line, and boy does it. It's still staying below it. Now we probed a couple times above, but we're still holding that trend line as resistance. We're still holding 32.56 as resistance. So the play that we were looking for early in the week was shorts against this level. Try to get back to the median line. Now you pulled back into the 50 line, and that held twice. Here again, an overnight trade. So look, it's a near-term opening range below resistance. That's it. Don't give it any more respect than that. It's an uptrend. You're testing uptrend resistance. You're at lateral resistance. The opening range is taking shape just below. Again, for me, maybe I'm being a little stubborn. I still have been favoring the short side, looking for a move at least to the median line, and then we'll reassess there. Momentum, we were talking about divergence all last week, and this is another example of why you need to be careful with divergence. This can continue to mark point after point after point. It doesn't give anything in time. Here's a higher high, higher high, higher high, higher high, series of lower highs, right? So the volatility is there. It's got a decent range, but if you're taking shorts against 32.56, guys, just look, as soon as you get a quarter, the ATR just jump out. It's just not giving us the breakthroughs. So a couple of times have gotten stopped out of break even, or even taking a little bit off, and then it just hasn't been materializing. So look, for me, this is a pivotal range. If we make it above 32.56, you have to look for 33.40. It's the high day close for the year. It's a pretty stretch range. You might have a soft target here at those former swing highs from, what is that, July of last year, or this year. Excuse me, that's around 33, 32.90, let's call it. But really, you're risking a much bigger move. So Marco, does that make sense? Does that help you? You were looking for long-term and short-term bias on dollar CAD. Short-term, I'm bearish, but was concerned about the long-term picture. Yeah, for me, the long-term picture, it's not, how do I say this in a way that makes sense to you guys? I always look at things from here. This is how I determine my long-term stance, right? Once we broke this high early in the year, that was a break of multi-year trendline resistance. Right, so we have to obviously look for the rally. The rally failed at a great level. So the pullback throughout this whole couple of month process, all we were looking for is a tag of that parallel. We finally got that back in October. And now here's the rebound higher. So again, can I get bullish here? Even if I'm long-term bullish on dollar CAD at fresh, 5-6 week highs? No. So that's where we come into our near-term front, right? Daily chart capitulating here below 32.56. Intraday, that upslope has just been retarded. I mean, every time we try to pull off that level, you get a decent pullback initially, but then it fizzles out. You get a decent pullback, but then it fizzles out. So looking for a break of this late range. Would love to see dollar CAD back into the median line. Ultimately, a break above 32.56. High day closes at 33.40. You got a bigger range to play if that breaches. A breach of upslope resistance typically would be the sharpest part of the move. Don't believe me? You guys remember this? Right? The downside break of descending slope support. Guess what? That was the sharpest part of the drop. That was the sharpest part of the drop. Here's crude on the daily downside break of descending slope. Pretty darn big. Here it is. Pretty darn big. So very similar in that, dollar CAD, if it breaks near-term upslope resistance, try saying that 3 times fast, you'd probably see this thing rip really fast. Questions on dollar CAD? Okay, pretty spent on data from Canada this week. Manufacturing sales on top tomorrow into the close of the week, but not a major print by any means. Marco says clear. Right on, Marco. Cheers, mate. So that is dollar CAD. Number 6. 7 is Kiwi. And here's what Kiwi looked like earlier this week. So the basic premise for the Kiwi trade, we talked about wanting to see a little bit more of a pullback from 68.11, 68.54. Big resistance target on the weekly standpoint. You have slope there. Daily chart also highlighted a nice reversal off the 2017 low day close, a 38.2 retracement, perfect pullback. Basically on this one, you kind of want to look to remain constructive up 66, but we're still looking for that pullback to get a little bit deeper earlier. Here's what it looked like. We came right into this level. We saw a strong rebound, and then we went right back into 68.11, 68.12. Here's Kiwi dollar now. Okay. That low held like a charm. Didn't even make the actual tag of 66 of the 77 handle. Here's that support zone on the daily chart. I guess I should have showed you this one first because I didn't mark it up on the intraday chart. But the zone range was 77 to 77.15. Sorry about that, guys. Just got a message here. So Kiwi on the daily chart. Here are the levels. It's pretty clean. Broke resistance, checked it as support, rebound higher. Here's slope. Now, right now, it comes in around 68.37. It's a little bit ahead of schedule. I love this pivot range at 68.51 is the level I've been putting in the reports. I mean, you don't even need me for that. Just look at that support, break, acceleration, resistance. That converges on the upper slope right there. So whether whether it maxes out at 68.30 or 68.50, just watch that slope. Here's the intraday chart. Again, there's a convergence, a little bit ahead of schedule. So watch 68.40, 68.30, this region right here, 68.35, 68.36. But if you're not already long, there's nothing to do long here. If you're holding longs, again, slim out of that position a little bit, stops at break even or better, at least the opening range high for the week. This is going to be an area of contentious price action. We really, again, if we break through, just like the dollar CAD, it would be a breach of upslope resistance. I just don't see the catalyst that would offer that kind of move per se. So if you're holding longs on dollar CAD, start to trim that up as you get in your 68.50. I'd be looking for possible exhaustion if you're looking for a near-term scalp. Now, again, you're looking for a Thursday, Friday high because it's the opening ranges stretch into the week. So, be prudent in trying to fade this if you do. But I would be looking for an exhaustion move like this, probably very, very similar to what we saw last week. And again, guys, a lot of times just taking a look at price action can oftentimes give you a decent tell. I haven't even looked at this, so I'm just going to throw this out there and see how it looks. But last week's price saw a decent weekly opening range before the break, right? In time, very similar. So yeah, we can stretch into a new high today, but into the close of the week after the weekly weekly range break, you could see a little bit of pullback on Friday. So don't be too surprised if we stab into this level. If we get 68.51, I'm out of any long positioning at that point, looking for a little bit of an exhaustion pullback. Okay, but this has been very clean in this formation, and I want to respect the upper parallel right now. Outside of some sort of catalyst, some sort of news, maybe the Trump administration doesn't get the push through on the Mexico-Canada deal that is proposed, something like that, might fuel the rip. Not pushing aside, dollar CAD, Kiwi, both coming into levels of which may offer some resistance here on the near-term advance. Number 7, that's Kiwi. Okay. Your questions. I do want to take a look at gold. I'll do that after your questions. I see that question here for dollar yen. Look, I haven't updated you on dollar yen on purpose. Any yen exposure I've been taking has actually been on the yen crosses. So Aussie yen, even Euro yen looked like a decent play. Okay, for like a little bit of a swing lower. Wow, it went much deeper than I thought it was. This looks like a great short to me, just on account of slope and the 618. But kind of wish I would have gotten a little heavier on that one. Anyway, so the yen crosses have been looking interesting. Dollar yen. Here's my issue with dollar yen. Do you see this, guys? Do you see this slope? So here's the dollar yen daily chart. You know what? Here's the dollar yen weekly chart. Okay, let's be frank about this. Very similar to what you were asking about. Marco, in the longer term picture for dollar CAD, it's my same exact issue with the longer term picture. This broke multi-year downtrend resistance. If this is a consolidation break, here's the breach, pullback. Okay, if this was failure ahead of support, that would be even a stronger upside thrust. But there's no momentum. There's zero momentum. And in fact, you already have divergence in price. Here's price action with a higher high. Here's the oscillator with a lower high. Both those reference points below 70, really subtle. These tend to be actually decent signals. So listen, I've lost money on dollar yen more than any other trade in my entire career. I was the guy fighting dollar yen from the 130 drop back in 2007s and 8s. So I respect this trade with a little bit more on its ability to really rip people apart. Look, as it stands right now, if we break and close below that 200-week moving average, it would constitute an outside weekly reversal. Okay, now there's no weekly resistance per se here that I've been tracking. The level that we were looking for was right here. That was the swing high that we made in November of last year. We pushed through that November high week close. You can see there with my cursor, we made breaks above that multiple times. So this thing is just, from a weekly standpoint, it's ugly. It's not at structural or price resistance, but you're seeing divergence after that rebound. This is a log scale, by the way, right? When we're working on something like this, it's actually been a little bit cleaner on the on dollar yen, but that's the longer term picture, right? Here's dollar yen on the intraday on the daily chart. This is huge, right? Here's the high day close for the year. Once we made a close above that, in Mike Boutros' world, that's a breakout and a legitimate move above slope to go for the rally. Guess what? That was the 1 week, the 1 day we did it. Ever since that 1 day back in November 8th, we've been unable to close above that level. So exhaustion could be. The tell would be the break below here. Slope Monthly open, right around 113, 112.90. That's the break, in my humble opinion, that would shift this lower. Okay, we need to see a daily close below it. Now, near term, here's why I'm kicking myself. Because I was looking at this last night as it was approaching essentially this 113.56 zone, a basic 236 to the advance off the lows that we made back here in October. Slope support, right? A parallel off this low, excuse me, attached to this high right here, extrapolated there, caught the highs. If this break is legit, we should see acceleration. Here's the accelerated move. So it's all about this support zone, guys. Monthly open, slope support. You're looking at 113. You're looking at 112.90s. That's the break. Again, in my humble opinion, that would validate that we made a little bit more of a critical high here, at least in near-term price. Again, momentum knocking on the door in 30, even testing below 30 for the first time since the low. So either you're going to get a reaction like this, like we did when we saw momentum at this levels before, or if this sinks below 30, that might be the breakdown zone. And that would be the break of this uptrend support. It's kind of the trade that we were looking for on this drop last month before it quickly recovered back in. We're going to test that move again if we move below the monthly open. Okay, now if markets turn on risk, meaning risk off really does start to materialize, the bid for the yen will tend to strengthen. Okay, yeah, a lot of people say dollar will start to get safe haven flows. That's always the case, but guys, historically speaking, when we've seen real strong risk off, yen gains have been outpacing dollar gains. You see dollar yen actually start to move lower. So just keep that in mind. For me, I'm all about the pivot in the monthly open, specifically, guys, because when we broke above the monthly open, when we broke above the monthly open here on the second day of the month, when we tested this pullback here on the 7th, look at the low. The low is literally at the monthly open, perfect before we rebounded again. So it only makes sense to look for a break below that region to validate the reversal in dollar yen. Questions? Michael, I closed my previous long gold trade 112, open a fresh one at 1206. Would love to have your update. Yeah, we'll do that next, man. Any questions here on dollar yen? Marco, you had the longer term picture and the near term. Does that make sense? So watch. I mean, I love it lower, but you know, we got stung. I got stung personally when we made this false break last month, and then we recovered back above. It just so happens that if we break the lower parallel again, it's the monthly open that I would be focusing on. Here's the level. It's right there at that former swing low, 1295, 1294, same thing. All right. He says def, right on, my man. All right, so that is all the majors heading into the close of the week. We do get, if I'm not mistaken, on Friday, we do get the U.S. Consumer Price Index. No, industrial production figures. Yeah, just a little bit of ancillary data into the close of the week. We won't worry about it. On the dollar majors, gold looks like this. So dollar yen was number 8, gold is number 9. So I do write the weekly and intraday forecasts for gold on Daily FX. I'll have an update on that website later today. Here's what I'm going to be writing about. You guys know at the start of the week, I've been talking about 1205 being my line in the sand, 1201, 1205, this region here. The 618, this is the 50% retracement, excuse me, and the 100%. If this was corrective, I kind of wanted to see this zone hold. Now, price had something different in mind. Okay, we broke a little lower than we wanted to. We did actually manage to close just below that. Here's the recovery and test of what? Test of what? It's a test of the monthly open, guys, right here. Here's your monthly open. So if this was a false break of this trend line, I mean, let's say maybe I got a little overzealous, maybe it's this slope, okay? In which case we didn't close below it. But if this is a real rebound, the breach and close above this region, in my mind, would have me looking higher again. Why? Well, you have the 100-day moving average. Very clear objective pivot in price. We've talked about 1214, 1215, 1213, 1214 for a while. Former swing lows, highs, late swing low in October, break, now converges on the monthly open, and now converges on the 100-day moving average. So as far as the clarity in levels and conviction levels, it's beautiful. Okay. The only thing that bothered me this week was this break below the 50% retracement, below that pivot zone that I was looking at 1201, 1205. So Iman says, I closed my previous long trade at 1210. I opened a fresh one at 1206. Would love to. So 1206, that's the level I just deleted, that 100% extension. Yeah, I mean, what's your stop on that 1206 entry? Well, let me show you this, Iman. Here's the intraday chart. Okay, here's the intraday chart. This is the breach that you need to make to get the continuation. Okay, 1198. So just below that swing. I guess that's prudent. Yeah, it would be a prudent stop. Not bad. Let me work this level for you real quick. Hold on one second, man. So I want to show you just real quick before we move on what we were looking at this on the latest updates here. Here's gold to start the week, right? We were right here. Look at the levels we were looking at. We were looking at 1205 and 1201, both levels of interest for entries on the long side. So again, it slivered below, but we had divergence as we were making that last low after a trigger break, right? So even as this was making this low, definitely, you know, it's just not there. The break wasn't there. We should have seen 1191 pretty quick on the 618. My focus right now is on this region of resistance. Again, your monthly open, former swing lows, former swing highs, 100-day moving average. This is the level to beat. This is the level to beat. So on your 1206 entry, Iman, you know, you're up a little bit here. You're up $6 here. I would take a little off the table. If you want to leave it if you want to leave a little on the table for the breakout, if we get it, great. My humble opinion, just Mike Boutros, I wouldn't put a stop in the loss in the red at this point, because if you fail here, Eman, and it does make another move at the lows, if we break, like I said, I want to see acceleration. It'd be kind of pointless if we start to move lower again below this region. I'd get concerned you'd see a new low. So that's just my take on things. But you're basically testing, at least on the near term front, immediate resistance, like right here, right here. If we get the breakout above 1213, 1214 today on a close, I'm all with you, 100%. That was very good foresight on your behalf. But on the immediate front, you're at resistance like right now. Does that make sense? He says, yes, I'm always in need of your opinion. Cheers. Yeah, amen. And you'll always get it. Especially on gold. I follow this thing like a hawk. And on the bigger picture, here's the weekly chart. I'll be publishing this on Friday. Here's the weekly charts on gold. You guys have it on the updates. Look where we bottomed, guys. It's freakishly clean. Okay, here's the weekly chart. The pitchfork we've been following. You know, we talked about 1238, 1236 at length. That's where we've maxed out the October advance. Here's the pullback. We wanted to hold 1205, 1208, right? But look where this stretch made the low into the median line for this pivot. And not only that, this is a longer term trend line, guys. I'm gonna zoom this out on this weekly chart from the 2008 low, 2015 low on a closed basis on a weekly standpoint. That red line, you guys see it? Watch this. Boom. Boom. Right? On the intraday chart, or on the intra-week, I should say, we spiked right back into that parallel. So if we're going to make a move, it's all about a break above 1236, 1238. That's the breakout zone, as it were. The focus right now is on this range. So the longer term picture definitely gives you a little bit more of a feel for where we are in trend on gold. This is like really huge, big, major support, which is why the whole premise of this week was, you know, we want to see this rebound off this region. Okay, and that is gold. That's all I had on my list for today, guys. Let me know if there are any other questions you guys want to take a look at or any other setups. Again, I do have a Foundations of Technical Analysis webinar tomorrow morning on Daily FX. Throw me your topics, guys. I always try to look for your names in the webinars. Daily FX webinars, there's literally like hundreds of people in there. So I always try to look for your names first. But feel free to join me on that. If you guys want to talk about strategy, technique, a little bit more of a educational setting. And for the DXY crosses, watch this, watch these levels that we were talking about, specifically on the DXY. Again, I want to see failure here if this is going to move off this parallel. Euro, same type of gig. You know what I mean? If this fails, a break below 1260, you look for that drop into that 618 that we missed earlier in the week. All things held constant, I still want to see some follow through here on continued dollar weakness. Okay, I'm all out. All right, guys, have a great day trading. Best of luck, and I will see you guys tomorrow on Daily FX. Have a great weekend. Cheers.